Hello guys, so welcome back to my YouTube channel. This is Believe Nation, Believe It First. So I want to talk about how I do my top-down analysis to my entry points. So normally I do top-down analysis from daily time frame to 1 hour, precisely 1 hour, then wait for my confirmation with a lower time frame, 30 minutes, 15 minutes, 5 minutes. So today I'll be showing us how I do my top-down analysis that works for me. Alright, but before I go on, I want to show something. So remember when we are market structure, normal market structure, and one of my videos I say that whenever a market want to change trend, one of the reason or criteria that you know that it will change structure is that whenever it takes out a higher low or a lower low in a trend. So for example, this is an uptrend market and this is a swing low, and so we are expecting that market to respect this zone, to not break it, respect it, then push up, giving us a new break of structure to the upside. All right, but what happened is, how to know a true change of character is when market violate the recent swing low in an uptrend, violate it. Then what happened? We are going to wait for a confirmation that okay, this market is about to sell, then give us a break of short to the downside, then we use it as what, as liquidity, then do what, then begin our sell. All right, so this is how to identify a true break of structure, a true change of character. This thing now I use it for my higher time frame, also my lower time frame too. All right, so whenever that, let's say that market is in an uptrend from daily time frame, from your daily time frame, and when you go down to your lower time frame, you will be seeing something like this, market is kind of going market is kind of doing something like this, giving us market is just doing its stuff. All right, just know that what you are looking for is a buy opportunity. All right, a buy opportunity. Since your general bias is bullish, just know that you are looking for a buy opportunity, even though you are seeing a sell in your lower time frame. If you are seeing a sell in your lower time frame, just know that that sell is a pullback to a valid entry to continue the buy. All right, okay, so this pullback now that happened in an uptrend from daily time frame, all right, this pullback now, we can trade this pullback now in a lower time frame for 1 week. This pullback now is happening in a lower time frame. If you go down to a lower time frame, you'll be seeing something like this, break of structure on the downside. See, it got to a point of what, of change of character. So whenever you want to know a change of character in a lower time frame to continue the trend, it must break out the recent lower low. All right, come down, then you continue your buy. So I want to go to the chart so that I can show you how I figure out my bias and my entry to the market. All right, so this is Euro card. I want to use Euro card for this example. All right, so okay, we see that market was giving us a series of higher high, break of structure, break of structure, break of structure. I'm just marking out those significant break of structure that I see. All right, these are the visible break of structures that I see. So, and this one too, this is the last break of structure to the upside. This is the last break of structure to the upside, right? But most cases, market will come and use this as liquidity, as you can see it's used here as what? As liquidity, and give a small buy. All right, we give a small buy to the upside. You see it now. Then it didn't complete this buy because it's supposed to take this out. All right, so he didn't break it, using this as liquidities. All right, so using this as liquidity, tap on this valid POI, then give a confirmation, tap, come back, tap again, then begin to buy. But it didn't break its high, so it did what happened? Tap on this other block here and do what? And gave a sell. Now what happened? Remember what I said during my introduction. So I said that markets don't have to break the swing low in an uptrend. Now what happened is that markets came and broke this low, broke it, begin to change character. And not that the market break it though, came and give us a double change of character, like gave a double break, like showing that this is a strong change of character. Like break the second one, break the first one, break the second one. All right, and what happened is that now market did something like this. See a POI, market did something like this. See what market did now. Market give us what? A pullback, came down here again, come and touch this POI, using this as our liquidity. All right, using this as what? As our liquidity. I seen it now, using it as our liquidity. All right, so now I'm expecting this market to come back here, then break this lower low. All right, to break it. All right, so but this is market. All right, we are all spectators in the market. So this is what I'm expecting, for it to continue what it sell to the downside. All right, so now we have already have already know, okay, the direction of the market and where market is heading to. What am I going to do? I'll now go to lower time frame to pick my entries. All right, so now I've already know that market have already changed direction to the downside. So now what am I looking at now? I'm looking for what? For opportunity to do what? To join the trend and do what? And sell. Then I'll mark out my key level that I know that markets will likely come and tap to. All right, so now let me go down to my 4-hour time frame. Now if you go down to my 4-hour time frame, now find out that my 4-hour time frame is aligning to my daily time frame because of what? This is my last break of structure, and this is another break of structure. If you can see it, this is another break of structure. You get market changed character give us a break of structure, went up here, give us what? Swept liquidity, using this as liquidity. Now see this kind of entry model. Now see, sorry, market do something like this, sweep this liquidity, came down here, give us the individual liquidity for us, then do what? Sell. I getting my point now. So if I bring this thing out now, this is my God. Wait. This is how I trade. This is how I find my entry. Right? This is it now. Okay, so this is my entry model. Break of structure, give me a sweep, liquidity sweep. Alright, these are my criteria that I must see before I have to enter the market. Then give me what? My POI, a valid POI, unmitigated. Alright, unmitigated POI. Now what happened is market did what? Give an impulsive move and have to pull back, come down again. Did not break the structure. All right, so it now come back again, have to tap on this so once I see this thing now, I know that okay, this is where I'm putting my sell setup. All right, I'll put it here and do what? And target myself. Now using this as what? As my liquidity. The market have already given me a liquidity. Alright. So now what is remaining? To execute, and I will wait patiently for my market to tap here and do what? And begin to reverse. Alright. Now this is an entry model. Like this is a smart money entry model. So a liquidity sweep, break of structure, engineer liquidity or inducement, a valid POI or mitigated, then you take yourself. Now see what happened here. Now see what happened. See, this thing gave a break of structure, and if you go down to your lower time frame, you find that this POI has not been mitigated. All right, so now market give a liquidity. See, it gave a liquidity here. All right, and do what? And did a pullback, come down here, tap, give a fake move. I want to plug my system. All right, so now it gave a fake move that you want to do what? Want to sell. Now most traders that are not patient in the market will say, okay, since I've already, let me put my target here. All right, and target here. All right, so what happened is that markets will treat them that it want to sell. Market will treat them that you want to do what? Want to sell, and reverse from here, then hit the SL. Do you get? So if you don't understand smart money concept very well, you will be donating money to the market. All right, so this now I've taught you now is my entry model, and I will be showing you my entry model once I'm going down to my lower time frame to pick what? An entry. All right, so let's continue. I just put out an example. All right, so now what happened is that we gave break of structure. All right, and he's tilting down to the upside, targeting this low. Right, targeting this low. Okay, targeting this low. So I'll go down to my 1 hour time frame. Pick an entry. Okay, I'll pick my entry from 4 hour time frame, then I will refine it. Now if you check, now we have a multiple POI here. Like we have a multiple POI here. We have here, we have here, then we have here. POI choke for this trade. Choke. And we have here too. Alright, and one thing is that this POI now have fair value gap and have inducement liquidity. This one have fair value gap and have inducement. This one have fair value gap, you have inducement. This one have fair value gap and have what? Inducement. You have it has already engineered liquidity here. Alright, so what am I going to do now? I'll likely wait for my entry model here, to my entry here. Now, if I'm kind of, I'll use my trend line so that I will be sure. I will be like, the reason why I put this, I chose this on this more okay, I will choose my POI here. I'll choose my POI here. Alright, so if market, I'll wait for with confirmation. I will not use this early one as my POI, no, because market will use this as engineer liquidity. It will use this as a trap. So I rather wait for markets here, wait for confirmation. Since there are multiple POI, wait for confirmation, then continue my sell. Alright, then continue my sell. Alright, so once they give me confirmation, I'm going to sell. Alright, now what I'm expecting that market to do is that market to come and tap here, or rather it's have a tendency of retesting this, retesting this. Alright, but I'll wait for confirmation here, then sell. Alright, using this place as what? As my liquidity. Do you see it now? So now what happened now? I'll go down to my 3-hour time frame. I can use 3-hour time frame for my entry. I can use 2-hour time frame for my entry. So as you can see, if I want to refine this now, I can refine this to here. Alright, I can refine it to here. So if I want to make any sell, this is where my entry, but I'll have to wait for what? For confirmation. If I go wait for confirmation now, go down to my lower time frame. Alright, go down to my lower time frame. I'll pick my entry from lower time frame from 15 minutes. So now I'm targeting this break of structure, targeting this, like I'm targeting this. It has liquidity that market will sweep. So now another thing is that if you are putting your any to buy two or sell two, make sure that you are realistic with what you are doing. Alright, now as you can see, there is a break of structure here, there is an inducement. Alright, there is POI FVG liquidity that market is going to sweep, then begin to sell. Now I put my sell position in a value. Some people can put it here. Alright, some people can put it here. Alright, now I know that markets have to come down to this place, alright. That's why I put my POI down here. I'm just being realistic. Alright, now for you, now I will advise you, any POI you see, make sure that you put your near the last recent reversal or break. Do you get? Let your position to be realistic. Don't just drag your position to down here. For what? Don't be greedy in the market. For what if market come down here, then begin to revert, change direction? Uncle, what will happen? All right. So whenever you are picking a position, and stick with one risk to reward ratio. All right. Now what happened now? This is 1:5, risk to reward 1:5. All right. And my SLP is 3.0. My TP is 166 pips. All right. See it here. Okay. So I'm just being realistic. Now if I want to risk, I will risk a reasonable amount of money, and I wait for my 1:5R. All right. Now my event that market is not going to come to this zone. Once market clear this zone, there is high chance that it will clear this place and begin to go up. All right. So I'm waiting for markets here to do what? To take my sell. So this is how I do my top-down analysis. Very simple. Within 20 minutes, I'm done with my analysis, and I wait for my market from daily time frame. From daily time frame, we now come down to what? To our entry. Do you see it now? This is how to. And if you are now in a safer side of the market, because of what? One, your bias, your entry is aligning with the current trend of the market, which is the market is bearish. All right. And your entry is aligning with the bearish. Don't go and do counter trade. That market is tilting to the upside. You went and begin to buy. What if market reverse from here? Okay. That is necessary that follow the trend. Don't go against the trend. Whenever the market is selling, sell. Whenever it's buying, buy. Don't sell while the market is buying, and don't buy while the market is doing what? It's selling. Some people do it. All right. Some people do it, but I don't advise it. I don't do it. All right. So I believe that this class will go a long way. If you have any question, you can drop in the comment section. I will attend to it. Thank you very much. See you in the next class.